Oil spiked to 19% this weekend. Actually 19. Stocks tanked. Gold, the supposed safe haven, fell more than Bitcoin. And Bitcoin?
I'm not fucking leaving!
$67,000. 6-7. While the rest of the market was on fire, Bitcoin just sat there like, I've seen worse. The bears are calling for $47,000. A whole investment firm published a report about it. And in that same week, institutions put $787 million into Bitcoin ETFs. $787 million. In just 1 week, the New York Stock Exchange's parent company bought into a crypto exchange. Kraken got a Federal Reserve Bank account. Japan's pension fund, $1.5 trillion, is formally researching Bitcoin. And this month, something happened for the first time in human history. Something that changes the math on everything. Let's go, it's Satoshi time. Welcome back to Simply Bitcoin's Satoshi. I'm Sophie, and today we're breaking down 7 stories. Institutions flooding back into Bitcoin, the New York Stock Exchange buying crypto, Kraken getting a Federal Bank Reserve account, the bears crying wolf, Bitcoin holding through a war scare, and the number that makes every single bear case fall apart. Let's get into it. 4 weeks, 5 straight weeks of Bitcoin ETF outflows. Retail panic everywhere you looked. Polymarket had 62% odds on Bitcoin going below 50,000. The Fear and Greed Index, 19. Extreme fear. And then last week happened. $787 million flowed into US spot Bitcoin ETFs in 1 week. First positive week since mid-January. BlackRock's IBIT led the charge, over half the daily inflows on the biggest day. That's not retail. Retail was still selling. That's institutions, pension funds, endowments, big allocators quietly repositioning while your timeline was on fire. Bloomberg's ETF analysts called it. These are the buyers that are actually moving the markets, and they bought the dip. Since late February, over $1.5 billion has flowed back into spot Bitcoin ETFs, while you were calling for 50,000.
Basically, the way that the biggest users of ETFs broadly are advisors for the most part, asset allocators. They're investing money on behalf of their end clients, whether that's wirehouses or brokerage or registered independent investment advisors, you name it. They're allocating, and they have a goal to allocate a certain percentage to this space theoretically, right? So if they have a goal set of, I want 5% allocation to the space, and I'm going to use an index fund, they're going to have that set goal. And if the market price dumps on them, if they still believe in it, they're probably going to be buying. So they're like almost ballast on both sides. The other part of it is if they have a 5% allocation and the market rips on them, they might sell at the quarter end or semi-annual end when they rebalance and go back into and sell some of these products. So I think they're going to, over the long term, they're going to be ballast in the portfolio or in the actual pricing mechanism of these things. But again, ETFs are just a part of the market. And yeah, I think overall, these things, they tend to be long-term allocations rather than short-term trading. Obviously, short-term trading is part of what ETFs are, but for the most part, that's what's going on. And the thing I was saying about Bitwise is I was going to say this, but I see it too. Like when I talk to people in the advisor world, the TradFi world, and they're looking at this space and they're thinking about allocating, whether it's going from 0% allocation to 0.5% to 1% to 3, 5, whatever percent you're talking about, that's going on left and right. I see all these wirehouses that didn't allow anyone to buy these ETFs turning it on so their advisors can buy them. Morgan Stanley didn't allow any of their advisors to buy any exposure to crypto ETPs until October of this year, and now they filed for a Bitcoin, Solana, and Ethereum ETF. Like all those things, like the fundamental underpinning of like the potential demand coming from like my world, very strong. And then I go on crypto Twitter, and it's like you'd think we're in a 2018 style bear market where it's down 70+%. So there's like a dichotomy of like the two worlds that I look at of like how people are viewing this. And I think it more has to do with obviously a lot of people are probably in NFTs and really long-term, long tail altcoins and stuff. And those obviously haven't done well, but the broader ecosystem I think it looks pretty strong still.
Sound familiar? They buy when you sell. Every single time. One analyst called it coordinated buying among large allocators, pension funds, and endowments seeking relative value. When the people managing retirement savings for millions of people decide that Bitcoin is undervalued, That matters. $787 million, while the Fear and Greed Index was screaming, sell everything. CK Zheng, ZX Squared Capital, published a note this week saying Bitcoin is in a deep bear market and could drop another 30% this year to $47,000. His argument? Very simple. The 4-year cycle. Nico's been preaching about this all along in the live show. Bitcoin peaked in October, about 18 months after the April 2024 halving, and if this pattern holds, the bottom isn't until late 2026 or early 2027. 47,000. Everybody breathe. I get it. The pattern has held before, and the math isn't that crazy. We've seen more diabolical dips. But here's what CK Zheng isn't accounting for.
I know there's a lot of fear about the 4-year cycle. We didn't have much of an upcycle by Bitcoin standards, so we think we're pretty well through the down cycle here. We may test in this 80 to 90,000 range on Bitcoin, but we do think that the test will be successful. It will be the shallowest 4-year cycle decline in Bitcoin's short history, and then we're off again. We think this is 3 revolutions in one: a global monetary system, rules-based, competing against fiat currency, to be sure. It is a technology revolution, and it is the leader of a new asset class.
Kathy Wood, ARK Invest, we believe the 4-year cycle will be broken. Why? The buyers, the ETF holders, the institutions who don't panic sell, the people who just put $787 million in last week while CK was writing his bear report. Bernstein has a $150,000 price target. Standard Chartered has a $150,000 price target. Jeffrey Kendrick at Standard Chartered literally said that the halving cycle is no longer relevant because ETF buying has changed the supply-demand structure of the market permanently. The 4-year cycle argument was built in a world before institutional ETFs, before wealth funds, before the world's largest pension fund asked questions. But that world is gone. So when CK says 47,000, I have one question. Are you accounting for the $1.5 billion that just flowed back in over 2 weeks? Are you accounting for Japan's pension fund, Morgan Stanley, ICE? So thank you, CK. Genuinely, every single time someone calls 47,000, the smart money buys another tranche. The New York Stock Exchange, founded in 1792 under a buttonwood tree. What is that? The most powerful stock exchange on earth. Their parent company, Intercontinental Exchange, ICE, just put $200 million into OKX, a crypto exchange. They valued it at $25 billion and grabbed a board seat. ICE's CEO, Jeffrey Sprecher, said, and I'm quoting directly, "Our strategic relationship with OKX will accelerate our plans to offer on-chain infrastructure and tokenized assets to U.S. investors." On-chain infrastructure, tokenized assets from the New York Stock Exchange's parent company. Crazy. OKX's token jumped 58% in 1 hour because when the most powerful stock exchange on earth puts $200 million into your house, the market notices. The suits aren't fighting crypto anymore. They're buying it. Wall Street didn't lose the Bitcoin war. Wall Street is actually just joining the winning side. Better late than never. And here's what the deal actually means. ICE will license OKX's spot crypto prices to launch US-regulated Bitcoin futures. OKX's 120 million users get access to the New York Stock Exchange's tokenized stocks. 2 financial worlds merging into one, and Bitcoin is right in the center of both. Think about what it takes to get here. ICE sat down with OKX's founder for what was supposed to be a 30-minute meeting, and 4 hours later, they had a deal. 4 hours. That doesn't sound like a trend they're chasing. It actually sounds like there was some conviction in those 4 hours. Okay, I have to talk about this one. Kraken, one of the largest crypto exchanges, applied for a Federal Reserve master account in 2020. 5 years ago. A Fed master account is what gives the banks direct access to the Fed payment rails, FedWire, the system that moves $4 trillion a day. Every real bank has one. Every crypto company, zero. until Tuesday. The Federal Reserve Bank of Kansas approved Kraken's application, first crypto firm in U.S. history to access the Federal Reserve's core payment infrastructure. Kraken's co-CEO said, "We can operate not as a peripheral participant in the U.S. banking system, but as a directly connected financial institution." Senator Cynthia Lummis called it a watershed moment for the digital asset industry. 5 years. They fought 5 years for this. The same Fed that built the broken system Bitcoin was designed to replace just handed a crypto company the keys to their payment network. The Fed. The same institution Bitcoin was built to make irrelevant just validated a crypto company as a financial institution. And the banking lobby is mad about it, by the way. The Bank Policy Institute says they're deeply concerned. The traditional banks spent years keeping crypto off the payment rails, and now the door is open. The first one through is always the hardest, and Kraken got through. Regulate that. 2 more, quick, because they matter. Morgan Stanley, $1.5 trillion under management, just amended their SEC filing for spot Bitcoin ETF. They tapped Coinbase and BNY Mellon as custodians. The infrastructure is being built by the people who know how to build it. And across the Pacific, Japan's GPIF, the government's pension investment fund, the world's largest pension fund, they manage the retirement savings of 67 million Japanese citizens, $1.5 trillion in assets. They just announced that they're formally exploring Bitcoin as an investment, sent out an official request for information asking how pension funds around the world are incorporating Bitcoin into their portfolios. They're not buying yet, they're asking. And honestly, that's how it starts. First you ask, but then you allocate. When the world's biggest pension fund starts asking questions about your asset, that's not noise. That's the signal before the signal, the pre-signal. It's like a pregame, but for Bitcoin. And I want you to sit with this for a second. Morgan Stanley manages $1.5 trillion. GPIF manages $1.5 trillion. That's $3 trillion between two institutions that are both moving towards Bitcoin in the same week. At the same time, independently. They didn't coordinate. They just did the same math. And look, Morgan Stanley, GPIF, Abu Dhabi, they're all buying Bitcoin ETFs. Someone else is holding their Bitcoin for them. And for them, that's okay. But for you, you should hold your own keys. That's where the Bitcoin way comes in. Your personal Bitcoin IT team. Self-custody training, cybersecurity, Plan B residency, over 20 years of experience. They simplified the whole thing so that you can stay in complete control of your stack. Book a free 30-minute consultation at thebitcoinway.com/simply. Tell them Satoshi sent you. Let me paint the picture of what happened this weekend. The US-Iran conflict escalated. Oil spiked 19%. 19, highest level in over 4 years, over $110 a barrel, trending towards 115. Stock futures tanked. NASDAQ futures 1.5% before Monday's open. S&P same. The traditional safe haven, gold, actually fell 1.6%, which to us Bitcoiners is nothing. But I digress. Silver fell over 1%, and investors ran to the dollar. But Bitcoin, it dropped from 68 to 66,000, and then it bounced, currently sitting at around 67. Now, I want you to understand what that means. In the middle of an active military conflict with oil spiking in a way that we haven't seen since 2022, with stocks down with the market in a genuine risk-off panic, Bitcoin held better than gold, the supposed safe haven, the thing that's been a store of value for 5,000 years. Bitcoin held. James Butterfill from CoinShares said that Bitcoin has been trading between 65 and 70,000 since early February, in a war, with oil prices doubling from the 2026 lows. That's not fragile. That's range.
I'm sticking with it. I think I said $250,000 Bitcoin, and I am going to stick with it until December 31st, 11:59.
Pardon me. I tried to make it a little better for you there, Arthur. I tried to say it was 200,000, knock 50 grand off, but you're sticking with the 250. By the end of 2026, what do you think?
I think we'll be, 500 to 750,000 Bitcoin. I think 2026 and 2027, this is the meat of the money printing. The Trump administration is going to do what they know how to do best, what every government knows how to do best. When in doubt, print the money. If the people are unhappy, print the money and hand them a goodie. And they're going to show up at the polls and hopefully vote for you.
Hayes calls Bitcoin a liquidity smoke alarm. When the world gets scared, governments spend. And when governments spend, central banks print. When central banks print, Bitcoin rises. The war is the trigger. The printing is the fuel. But here's what I find more interesting than the bull thesis right now. Even before any of that plays out, even before the Fed starts cutting, even before the money printer turns on, Bitcoin just held during the scariest weekend in months. Gold fell and Bitcoin didn't. I don't think you guys understand what a big deal that is. That's not a prediction. That already happened. Oil is up 19% and Bitcoin is at $67,000. The bears want you to think that means it's about to collapse, but I think it means the opposite.
It's alive!
And if you're watching all of this, institutions loading up, war panic, bears calling 47,000 and thinking, okay, I need to start stacking, let me make it easy. Bitcoin Well, the self-custody Bitcoin on-ramp. You buy Bitcoin directly into your own wallet. No middlemen holding your coins, no custodial risk, non-custodial by design. Trusted by over 50,000 users, and they're publicly traded on the TSX Venture Exchange. Set up daily recurring buys and stack automatically. Sign up at bitcoinwell.com/simplybtc. That's my link. And right now you get 3 chances to win 1 million sats. That's 0.01 Bitcoin just for signing up. Not nothing. bitcoinwell.com/simplybtc. So here's the number that ends every bear argument. Every single one. This month, March 2026, the 20 millionth Bitcoin was mined. 20 million out of 21 million. 95% of all the Bitcoin that will ever exist is already here in circulation being held. The remaining 1 million will take 114 years to mine. The last Bitcoin won't be issued until the year 2140. Joe Burnett, analyst at 3 Capital, just posted this on X this morning, and I want you to read every word of this. Over the next 114 years, Bitcoin's supply grows 5%. If the US dollar's money supply keeps expanding at its historical rate, 6.7% per year, and that's the long run average, over those same 114 years, the dollar supply expands approximately 1,624 times. That's 162,000% monetary inflation. 5% supply growth. 5 versus 162,000. But let's make this worse. Better for us. Between 2.3 and 3.7 million Bitcoin are already gone forever. Lost wallets, forgotten passwords, hard drives at the bottom of landfills, people who passed away without passing on their keys. Satoshi's original coins, which have never moved once in 17 years. Those will never come back. The blockchain is public and we can see them just sitting there forever. So the real number of Bitcoin that can actually be bought, sold, or stacked, it's closer to 17 million and maybe less. 17 million coins for 8 billion people, for New York Stock Exchange's parent company, for Morgan Stanley, for Japan's pension fund managing the retirement of 67 million citizens, for every sovereign wealth fund and every institution that's waking up right now. And the dollar will inflate 162,000% while that 17 million grows by exactly 5%. Those two things cannot coexist forever. One of them has to break, and it's not going to be the one with the fixed supply. The institutions know this math. That's why $787 million came back in the last week while you were panicking. That's why ICE put $200 million into OKX. That's why Japan's pension fund is formally asking questions. That's why Kraken fought 5 years for a Fed bank account. And that's why Morgan Stanley hired Coinbase and BNY Mellon. They're not buying Bitcoin because it's going to 47,000. They're buying Bitcoin because the supply is almost gone and the dollar never stops printing. so stack accordingly. We just talked about the 20 millionth Bitcoin being mined, so it's only right that we talk about the people doing the mining. Mining Disrupt is the world's largest Bitcoin mining expo, the biggest names in the industry, cutting-edge rigs, Bitcoin and AI integration, live-streamed keynotes, and the best networking you'll find anywhere in the space. Go to miningdisrupt.com and grab your tickets. Use promo code SimplyBitcoin for 20% off. Check miningdisrupt.com for the latest event date and location, and we'll see you there. Here's what I want you to walk away with today. Oil spiked 19%. A war is happening. The fear and greed index is at 19. The bears want 47,000. And in the same week, institutions dropped $787 million into Bitcoin ETFs. The New York Stock Exchange's parent company invested in crypto. Kraken got a Federal Reserve Bank account. Morgan Stanley filed a Bitcoin ETF. Japan's pension fund is asking questions. And 95% of all Bitcoin that will ever exist is already mined. The dip is real. The fear is real. The war is real. But the math is even realer. 162,000% monetary inflation against 5% supply growth. That's not a trade. That's a verdict. Thanks for watching Simply Bitcoin's Satoshi. Don't forget to smash the like button, share the show with your friends, drop a comment below. I read them all. Follow me on X at InternetSophie without an E at the end. And as always, stack, slay, and stay bullish, baby.